One of the most enjoyable words in the English language is free, especially when it means getting something of value for free. For federal employees, the basic life insurance coverage under FEGLI offers three viable components at no cost. In this video, I'm starting a two-part series where I'm breaking down different parts of the FEGLI program. This first video will highlight some of the best benefits of FEGLI, while the second video will address some of the drawbacks of FEGLI and when it might make sense to drop certain parts of your coverage. But before we fully dive in, welcome to the Money Briefing. My name is Jarrell Harvey and I'm with Fedway Financial. On this channel, we cover topics related to personal finance, federal benefits, and retirement planning. So if you find this video helpful, please consider sharing and subscribing. The Federal Employees Group Life Insurance Program includes basic insurance and three optional coverages. Basic insurance provides the foundation of the FEGLI program, and is arguably the most important part of FEGLI, not because it offers the most coverage, but because it provides relatively cost-effective protection along with a few free perks while you're employed and after you retire. All eligible federal employees are automatically covered under basic life insurance, and your coverage amount equals your annual salary rounded up to the nearest thousand plus 2,000. For example, an annual salary of $88,250 rounds up to $89,000, and adding 2,000 brings the total basic insurance amount to $91,000. The federal government pays 1/3 of the premium cost for basic insurance, and the employee pays 2/3 of the cost. Basic insurance is offered at a flat group rate, which means each person pays the same premium rate regardless of their age or health status. The current biweekly cost is 16 cents for every $1,000 of coverage and $34.67 on a monthly basis. The premium rate does not change as you age. However, since your coverage is tied to your annual salary, your total insurance amount and cost will steadily increase during your federal career. Additionally, the rate structure for all participants is subject to periodic adjustments. Given that a 30-year-old employee pays the same premium rate as a 62-year-old retiree, one way this relatively higher cost is mitigated is through a special insurance provision called the extra benefit. This perk is offered at no additional cost to younger employees. If you're age 35 or younger, the extra benefit doubles your basic life insurance coverage for free. Once you turn 36, the extra benefit begins to reduce by 10% each year over a 10-year span. Therefore, starting at age 45, the extra benefit comes to an end, and you'll only have basic coverage. This chart shows how the extra benefit works based on the basic insurance amount of $91,000. To calculate the amount of the extra benefit, multiply your basic insurance amount by the appropriate age factor. So at age 35 and younger, the total insurance is $182,000. At age 40, the total insurance amount will be $136,500, and at age 45, the total amount will be just $91,000. In addition to the extra benefit, another free perk of basic insurance is accidental death insurance. This benefit provides funds in the event of a fatal accident. For benefits to be paid, the death must occur within 1 year from the date of the accident and be a direct result of that accident. Accidental death insurance is automatically included in basic insurance for employees at no additional cost and is equal to your basic insurance amount. For instance, if a federal employee dies in a fatal car accident, their beneficiary will receive double the amount of their basic insurance amount, plus any additional death benefits that they are entitled to. This benefit is paid regardless of your age, but the coverage stops when your employment ends. And lastly, you have the option for free FEGLI coverage at age 65 or at retirement if you work beyond age 65. When you retire, the value of your basic insurance will lock in at your final annual salary. And just like when you're working, your last salary will be rounded up to the nearest thousand, and another 2,000 will be included to make up your final basic insurance amount. At age 65 or at retirement, you may choose to have no reduction, a 50% reduction, or a 75% reduction to your basic amount. With the 75% reduction option, you will no longer have to pay premiums for your coverage. But the downside is that your insurance coverage will decrease by 2% per month until it reaches 25% of your final basic amount. In other words, if your final basic coverage amount is $120,000, your insurance amount will gradually reduce until it reaches $30,000. The full reduction period takes just over 3 years. Even though your insurance coverage is significantly lowered with the 75% reduction option, many people's need for life insurance diminishes as they age. The reduced benefit acts similar to a final expense insurance policy because the benefit provides permanent coverage until you die, and the policy can help your loved ones cover any final expenses, such as funeral and burial costs, medical bills, probate fees, or small debts. Just as a reminder, to keep your FEGLI coverage during retirement, you must be insured for the 5 continuous years immediately before your separation date, and you must retire on an immediate or postponed retirement. If you choose to postpone your retirement date, your FEGLI coverage will stop until the date your pension begins. So, in summary, the extra benefit, the accidental death benefit, and the 75% reduction benefit provide 3 viable perks at no cost to federal employees and retirees. If you received any value from this video, please click the like button. You can also subscribe to our channel to get more content like this. If you're interested in seeing how we help our clients at Fedway Financial get the most out of their money and federal benefits, please visit our website at www.fedwayfinancial.com, where you can schedule a free consultation by clicking on the meeting link in the video description. Thank you for watching, and we'll see you on the next Money Briefing.